My sense is that in the next 5-7 years, one of the things which will play a very, very important role is the renewable energy. You will be surprised to notice that in terms of solar, we are now ranking as third largest in the world.
Welcome to Market Pillars Uncovered, the educational series where we bring you powerful insights from leaders shaping India's financial ecosystem. Today, we're joined by an industry veteran, Mr. Vikas Agrawal, founder and CEO of AltPort Experts. With over 2 decades of experience in the asset and wealth management industry, he has established himself as an iconic figure through his financial education programs for HNIs and ultra HNIs investors across India. AltPort Experts offers unparalleled expertise in AIFs, PMS, gift city funds, investments for NRIs, and several other offerings, helping investors deploy more than 500 crores across 10 countries. In this episode, we'll dive into understanding NRI investments, gift city funds, PMS and AIF strategies, India's economic outlook, and the high growth industries shaping the future. Thank you so much, Vikas, for joining us today.
Thank you for having me. It's a pleasure to be here at Money TV.
Likewise, and let's get started. And first off, I want to ask you about the big picture, how the macros are shaping up. So given your extensive research, your rich experience in investing, where do you see the economy heading from here on, and by perhaps 2030? What's the outlook and how do you see it shaping up?
Right. So thank you for asking this question. So, you would have heard our Honorable Prime Minister talk about his vision of 2047, India is going to be a developed economy. But when you look at from a 5 to 6 years point of view, that is what you're trying to understand. See, look, we are at about $4 trillion economy, the size, and our nominal growth is about 12%. So if you grow anything at 12%, in 6 years, you double the economy. So essentially, I'm trying to tell you that in next 6 years, this $4 trillion economy is going to be $8 trillion economy. The other way of looking at it, the same thing is that as we move from fourth largest to third largest in terms of the size of the economy, this is the safest period for any investor to think about investing in India. So in a way, we are becoming global. One. Number two is that the size of the economy by 2031 or 32 is going to be somewhere about $7.5-8 trillion. So that's the kind of opportunity that we see.
What is backing this optimism? What are the key drivers or the big sectors of the market which will be driving this growth? You're talking about doubling the size of the economy.
Right.
So what are the most promising sectors that would be at the forefront of this growth?
So 2 or 3 things here. One, you need to look at that what is the kind of growth the economy has had. Now, all of us got surprised when we saw this time the GDP number clocked at more than 8%. Now, these kind of numbers were not seen before. So one of the things is when you look at the GDP, there are 3 things. You have services, which is the top, then the agri, and third is your manufacturing, which is supporting this. My sense is that in the next 5-7 years, one of the things which will play a very, very important role is the renewable energy. You will be surprised to notice that in terms of solar, we are now ranking as third largest in the world. So India is not India which used to be on 8th or 9th or 10th position in terms of ranking. Now when I say that we are fourth largest, you see that India is in these sectors, the key sector that I'm talking about, is already started ranking fourth or third. The other sector that I'm very optimistic about is the defense sector. Our Honorable Prime Minister, the kind of dream that he has. As we continue to grow, we've been investing a lot in defense industry. And as a result of that, I strongly believe that this sector will likely to take a big leap in terms of growth. The other thing is pharma. Pharma historically has been one of the latest ways, not to go away from the fact that we supply medicines to most of the world. The people in the world, around the world. And therefore, I would say that pharma is another sector that we are very bullish on, and more particularly the healthcare within pharma, which I believe is likely to grow. So these are the 2-3 things that I
So
personally
more
believe.
pharma or more healthcare services and diagnostics, etc.
Yeah.
Is that where you're more interested?
Right. So I would say more of healthcare and services.
Hmm.
For example, now you see hospitals. Now this was never considered as an investment opportunity for anybody. But look at the number of beds, the way it is occupied, and the kind of technology which is supporting. And this has become one of the key sector within
And
the
so many
healthcare.
new players entering the market.
Oh yes, yes. So we see that there will be a huge value migration as we move ahead. So India is kind of at an inflection point where new themes are emerging, and these themes are playing out well in India.
You know, you've of course founded AltPort Experts.
Right.
Can you tell our viewers a little bit about what you're doing? Any big milestones that you've been able to achieve so far?
So before I talk about when I led down the foundation of this organization, let me just talk about my experience. So I spent about almost 2.5 decades in the industry. And one of the observations that I had is that particularly alternates was highly scattered in the sense that they were good quality portfolio managers, but they didn't had an access to good like-minded investors. And they were good like-minded investors, but never had an access to high quality portfolio managers. And by the way, these high quality managers used to be on the board of so-called large wealth outfits, where these people used to decide the destiny of the high quality portfolio manager. So I wanted to kind of solve this bigger problem. And therefore I thought in 2020 during the COVID time, I thought that's a good time. So during that time of COVID, I thought we'll build a platform, AltPort, where we'll invite these, the problem that I wanted to solve is to invite the portfolio manager, invite the investor, and create a platform and an ecosystem so that the bigger problem can be solved and people can be sure about creating the long-term wealth. So this is how we do. So our platform basically offers distribution of good, high-quality alternative investment funds where the minimum ticket size is 1 crore as per the SEBI rule, and PMS, which is where the again minimum ticket size is 50 lakhs rupees.
Right.
So it's meant for HNIs and ultra HNIs and some of the family offices. And this is how we help them to create.
A big part of this market, this segment, is also NRIs.
Yeah.
So if you could also give us some sense on the process, the taxation, and you know other important aspects of NRIs who want to invest in India.
Right. So one disclaimer here that look, I'm not a chartered accountant, so I really can't comment on the taxation aspect, but I can talk about the industry practice.
Sure.
So first of all, you talked about NRI. See, NRIs, first of all, let me just share one data points here. You know, what would be the net worth of these NRIs? You know, your total size of the economy is about $4 trillion that we just talked about. And some sort of analysis and research suggests that these NRIs who were one point of time Indians and become non-resident Indians have created a equal amount of net worth after going abroad. So the opportunity is that the $4 trillion of investments have been created by them. That's the size. So these NRIs have realized over a period of time. There was a time when nobody used to talk about India. People were fascinated about the growth happening in the US or in some part of UK. But they've realized that now they'll have to invest back in India because India is one of the fastest growing engine for the globe.
That's the future.
That's the future. So therefore, these NRIs, what we are witnessing at our platform level, and we manage about almost 900 odd crores, is that these NRIs are taking a lot of interest to invest in, and they want to participate in Indian capital markets. And it used to be very difficult earlier in the sense that as an NRI, you have a lot of issues in terms of taxation, in terms of the availability of the funds, because there are US investors and they have restrictions that they cannot invest in a particular fund. There were very few fund houses who were ready and used to accept funds from the US. So therefore, it is becoming even more easier for them to have an access through these AIFs and PMS managers and invest in these asset class, more particularly in equity as well as private equity.
So where does the GIFT City funds come into the picture amid all this?
Yeah, that's a good question. Thanks for asking that. This is something which is shaping up very well in India. So GIFT City, what is happening? GIFT City, there are two things. One, through GIFT City, you have inward funds and then you have outward funds.
Right.
Inward funds in the sense that if you are investing as an NRI, you can invest in funds which essentially invest in Indian capital markets. And good thing is that you can invest in dollar term and you can redeem in dollar term. So people don't want to bring the money back in the rupee format. They want to keep either in dollar or their own country, whichever country they are in, they want to keep money in their own currency. So through GIFT City Inward Fund, they can participate in Indian capital market, enjoy these higher returns sitting abroad and take the money back in the dollar term. The outward is basically, if you are an Indian and you have a limit up to $250,000 that you can invest in abroad, you can, sitting here in India, you can participate in other emerging markets or perhaps the developed economy. Like you want to participate in US markets, there are two ways of doing it. Either you go and invest, identify companies, do your own research and invest, or you do it through fund managers. So the other way of doing it is through GIFT City AIF is through fund manager you can invest across the globe
abroad
and diversify.
So given all this, initiatives, how easy it has become, how accessible for NRIs to invest in India has become, and vice versa.
Yeah.
How are you seeing, this shaping up going forward, especially NRI money coming into our country? How is it likely to shape up in the next 4 or 5 years?
Yeah, let me give you some interesting numbers here. You will not believe, or you'll be surprised to notice that 350 funds have been registered under GIFT City in the last 1.5 years.
Wow, that's a staggering number.
Yeah, look at the kind of growth. And all of them have become online. There was a time when you need to sign to 25, 30 papers, pages and all that. But this has become very online within 10 minutes.
All paperless.
All paperless. Within 10 minutes, you can set your account, get your KYC done and start investing. It has become that easy now. And that is what NRIs are appreciating. Because there was a time that, our land of law used to suggest that you have to be in India before investing in these companies. Now, suppose you are in Dubai and you want to participate here. Sitting there within 10 minutes, you can set up the account. Within 24 hours, your account will be ready to fund.
Okay, that's wonderful actually. It's quite accessible and making things so seamless.
Right. And when you want money, within 2-3 days, whatever is the term and condition, you get your money back in dollars.
So it's pretty smooth.
Yes.
Perfect. I also want to circle back to AIF and PMS, which you were mentioning about.
Sure.
In your experience, these are the only strong options for HNIs and NRIs to park their money in India?
I won't say that this is the only way of creating wealth, but I would certainly say that, look, let me go back here. One thing is that post Harshad Mehta scam in 1996, you saw that mutual fund ka gathan hua. Mutual fund was kind of regulated by the regulator, SEBI here. The first question is that we need to understand, and that is what most of the investor wants to know. When mutual fund is already there, then why do we need AIF and PMS? So broadly, when you look at, and the regulator is supposed to be a father of the industry. And as a regulator, it has 3 children. So first is mutual fund. Mutual fund to sahi hai. That is bada beta. Where the size of the mutual fund industry is about 75 lakh crores. So it has gone to smallest of the smallest city. And mid-sized investors who's earning maybe 1 lakh rupees a month is also investing through SIP. So mutual fund to sahi hai.
Right.
Now, when you look at last 30 years of data, the benchmark would have ended up delivering about 11-12% kind of growth. And even if you would have picked up the worst to worst mutual fund, it would have ended up delivering about 12.5-13% kind of. So it has really created good amount of wealth in Indian economy. Now, the question is that why do we need AIF and PMS at the first place? Is the regulator thought that there are sophisticated investors who wants to customize their portfolio. For example, if you're investing in through mutual fund and if you're investing it through 2 other investment vehicle, which is AIF and PMS. In PMS, you can customize the portfolio that you want. Suppose you're bullish on Indian economy and you want to create portfolio in and around defense sector that we talked about, you can have complete defense sector portfolio through PMS. That's the kind of mandate that you can take. On the other side, through AIFs, let me just take a minute and explain that for the benefit of your audience, is that you have 3 different categories out there in AIF. The category 1, which essentially invest in startups. And these angel funds And there, the minimum ticket size has been relaxed from 1 crore to 25 lakhs rupees to these angel funds. Then you have category 2, which essentially invest in private equities, which is a late stage companies, private credit, real estate investing, and also a combination of both. That is what you can do in the category 2. There, the non-promoter and non-institutional between category 1, 2 and 3, you will not believe the size of the industry has become almost 2.5 lakh crores in a matter of only 15 years. Because 2012, this AIF industry got regulated. And you have then category 3, which can do either unlisted and listed both, or can go more, create long only portfolio, or also can create long short portfolio. So broadly, these are the 3 categories in the AIF space. On the other side, the PMS is, let me make it more easy for your audience, is that in a PMS, what you're doing is essentially you're signing the power of attorney with the portfolio manager and giving a mandate to the portfolio manager to invest on your behalf. That's what you're doing basically. And you can customize the portfolio. So therefore, it is meant for sophisticated investors whose portfolio size may be in crores and looking at creating long-term wealth.
So amongst all of the categories and of course AIF versus PMS that you explained to us, what is the most popular right now in terms of numbers for NRI investors and HNIs, ultra HNIs?
Oh yes, NRIs are opting for AIFs mostly because one, it becomes easy for them to do the complete documentation as you were asking me. And at the same time, AIF is also well regulated in India now. And also it's well regulated under the GIFT City platform. And number of AIFs, another number that I want to highlight here, in the last 13 years of this industry of AIF, we've got about more than 2,000 AIFs which are approved by the regulator. And these AIFs are mainly focusing on long-term wealth creation. And therefore NRIs are opting for AIF.
So let's say anyone watching us right now, watching the show right now, wants to start investing in AIF or a PMS. What are some basic criteria, let's say 3 points to keep in mind while selecting which AIF or which PMS to park your money?
Right. So it's very challenging, not easy. But 2 or 3 things that I want to highlight. One is that the way we look at it, because our full-time job is to do complete research. We are a research-driven organization. And as I said, there are 2,000 AIFs. There are 1,047 PMS schemes which are approved by the regulator as I talk to you. And you have about 350 GIFT City AIF and PMSs. So the total size is about 2,500. Now choosing 1 or 2 out of 2,500, you imagine how difficult it is. So therefore, one of the important aspects that we do is that we spend 50-60% of our time as to understand who is the fund manager. What is the pedigree the fund manager brings on the table?
Right.
What is the kind of track record the fund manager has? What is the kind of DNA the organization has?
Similar to how you pick a mutual fund.
Yeah, to some extent. To some extent. And then at the same time, there are other aspects also which needs to be. So like at an organization level, we have got about 57 different parameters through which we evaluate each of the schemes and the portfolio manager. But broadly, what you're saying is right. The broader point is that who is a fund manager, because you are ultimately betting on the jockey and not on the horses. So you'll have to really look at that, who is the fund manager. And then the underlying scheme, what is the objective of the scheme and what is the kind of flexibility the fund manager has within that if tomorrow thing doesn't happen. So 2 or 3 things. One, the track record. Second, the pedigree of the fund manager. And third, most important aspect is the quality of the portfolio. That is very, very important. If these 2-3 broadly things are something that you like, then probably you can invest.
I want to spend more time on the quality part.
Sure.
Now, how do you ensure, again, for a lay investor or somebody who's starting their journey in this space, how do you understand what a good quality portfolio looks like?
Right. So most of the time what happens is that, and I don't blame our investors, they look at the past performance. If the performance is good, they end up investing in those.
But that's not always enough, just the past performance.
Yeah, my heart goes out when I see these accidents take place. And unfortunately, as I said, this is highly industry which is highly scattered. You don't have a platform where you get all these information available. at one go, unlike mutual funds in India. We try to do that at allportfunds.com. So, my suggestion would be that what they need to look at when I talk about quality could be something else for you, it could be something else for me, it could be something else for your investors. But one of the things that very important is that when you are looking at the portfolio mix, 2 or 3 things that we do, they should be doing it. One, you need to look at what is the earnings at a portfolio level. Because when you buy these good quality companies, you will see that earnings is remain intact. And when I see the earnings, then you get to see the PEG ratio of the portfolio. What is a PEG? When you calculate the PEG ratio, then you get to understand whether the portfolio manager would be able to beat the benchmark or may have compromised with some companies which is likely to bring into the table that there will be a turnaround story. And if the table doesn't turn, then probably it is considered as bad portfolio. So therefore, you have to have a lot of research before you decide.
Those are actually some very valid and actionable points. But I want to step aside from the market for a bit and talk about you. How have your learnings, your experience in the markets shaped you as a person and as an investor? Any key milestones that were life-changing for you?
I think the biggest turning point in my life was when I had a chance to attend Berkshire Hathaway's AGM in the US and had a chance to listen to the world's richest man, Mr. Warren Buffett himself, along with Charlie Munger. Those days, Charlie Munger was alive. And listening to them live and learning what is called power of compounding that he talked about. And the other aspect is the value investing. These are the 2 things which really stayed with me for a long period of time. And from there onwards, after coming back from the US, before going, I did not read any of the papers. But after coming back, I have read all the papers wrote by him at Berkshire Hathaway's AGM, which he has sent to his stakeholders. This company was started in 1957 times. And after reading that, I've realized that my affection, my love for reading. So I try to read at least 1 book a month and try to complete 12 books a year.
So suffice to say that it's one of your hobbies now, reading.
Oh, yes.
And is it all investing related?
Mostly,
literature?
Yes. Mostly.
Any other hobbies or interests that you have that again, help you unwind and, let you have your own me time?
I love to travel. So given the chance, I would love to travel. And during my travel time, I create some kind of imagination, and it improves me to sort of become more productive in my work. So another thing is traveling and observing people.
Great, Vikas. It was wonderful chatting with you. Thank you so much for sharing so many meaningful and actionable insights with us and our viewers today. It was lovely having you on the show.
Thank you so much for having me here. I truly enjoyed this market pillars, uncovered by Money TV. You guys are doing fantastic work. I must appreciate that, and my best wishes to you.
Thank you so much, and thanks once again for being here.